Hi, welcome to the Market Alert for Tuesday, the 24th of October 2017. So yesterday in the pound, very quiet day. There was no news yesterday, which is why both the pound and the Dow were fairly quiet until the latter part for the Dow, which we'll look at in just a moment. You can see the market's sideways here, range bound, and the market's probably waiting for Draghi to speak on Thursday. He's going to talk about when he's going to start tapering from the 60 billion a month he's been printing for the last 18 months down to 30 billion. He's not going to just turn the tap off, because that would create havoc, but he's going to look at tapering down from 60 billion to 30 billion. And that announcement is supposed to be coming on Thursday, so probably one of the reasons why the market is quiet. Speaking of Europe, a lot of news there today, all European news, and all out at 8:30. 9 a.m. is the latest economic news item. So after that, it's for the market to decide what it's going to actually do. So, and it's Tuesday, so the market could be fairly quiet once more. In the Dow, let's have a look. Start off with the 5-minute for yesterday. Say the market's really quiet. It's holding on these highs, but then it started to move slightly lower and then accelerated after the close. See the market moving lower there. We'll see something political coming out. However, as you would expect, the market has been brought back and is now heading back towards the highs, as we can see in the daily chart here. You can see there for the overnight, the market moving back towards the upside. A bit of volume again yesterday. This is interesting because we've not had any volume for weeks as the market's moved higher. All of a sudden, when we had this day where the market moved lower, then came back to the highs, we've seen an increase in volume. It is starting to taper off again, but it is actually above the average line, which we haven't seen for some time there. The high we've got in there at the moment is 23,367. That's the new all-time high, and no doubt that will be taken out at some point as well. Right, let's have a look at the implied volatility. A very interesting picture, as I spoke of yesterday, is still unfolding here. So let's have a look. So as the implied volatility, as you will see here, is moving from 807 to 916 for yesterday. The market is starting to move higher, even though the market has moved higher, certainly during the last 3 days. The implied volatility is also moving higher as well, which is very interesting to see as well. And again, in my opinion, this is because the market is so overvalued. I think it's 28 times now or something ridiculous. The whole of Zero Hedge is full about different theories of why it's going to crash, and other fund managers coming out and giving their opinions as well. But certainly the option sellers are getting nervous because the implied volatility has been moved higher by them. They're actually increasing this to cover any risk of any naked shorts that they would actually have. Right, as brief as it is, that's about it for today. Again, the news is just full of theories of why it could crash and so on and so forth, but until they want to crash it, it's going to remain like this. It's as simple as that. The only thing I can say is that the implied volatility is giving a bit of a clue that something isn't right, and they're not happy at the moment. That's anything that is concrete. All the rest at the moment are theories. Right, that's it. I will report in if there's anything reporting about. It's Tuesday, no news after 9 a.m. Market could be fairly quiet again, unless there's something that comes out of nowhere to give these markets a kick in. Other than that, I'd expect it to remain sideways to higher and quiet. That's it. See you in the next one.